Building credit is a lot like playing a game. Well, actually what it's a lot like is taking care of houseplants. Houseplants are very sensitive. They require that you water them just the right amount, and sometimes that's harder to determine than not. And overwatering your houseplants can kill them, but also underwatering your houseplants can obviously kill them. And some people are a lot better at knowing how to take care of houseplants than others. Some are better at understanding what the houseplant actually wants and needs versus like just going by the book and listening to this information. So really, I'd say when it comes to building your credit, it's about following what you're seeing work, ultimately. But I'm getting ahead of myself. I'm Melissa with Think Save Retire, and let's talk more about how to build your credit. I was very lucky. The day after my 18th birthday, my dad took me to the bank and he sat me down with a bank teller and we opened up a checking account, a savings account, and a credit card all in my name. This was really the first time I had my own account and was able to control all of it. And honestly, I think it was one of the smartest things that I ever did with my money. And, I really credit my parents for, coming up with that strategy and making sure it was something that they made sure I did. The other thing that I was really thankful for was I was added as an authorized user on one of my parents' accounts, their Costco credit card, which I'm sure they regretted more than a few times. Only times that I abused that privilege and they made me pay for it. So that also taught me lessons about how credit works and how and when to use credit versus when to not. Chances are if you're watching this video, you either didn't have parents that helped you out in that way, or you really were worried about credit and wanted to avoid having a credit card at a younger age and didn't really want to take on that responsibility. But either way, you're here now and I want to help you because while I did have those advantages and I did have that help, it taught me a lot. I've been able to help other people with that. And I also have people close to me who have struggled with their credit, and I've talked to them about how they can build it up. I actually recently shared on Think Save Retire a story about how, when I first met my husband, I didn't have very much money to my name. He had much more saved and put away that he had been really responsible with, but I had established credit for at least, I think, 3 years, and he didn't. He was very averse to having a credit card, and he hadn't built any credit aside from his student loans. The thing that's interesting is not everybody starts with the same credit score. Credit scores range from 300 at the lowest all the way up into the 800s, and I believe up to 900 at the very, very top. But not everybody starts off their credit journey at 300. Mostly you'll see having a 300s credit score if you've done things that have hurt and harmed your credit and you need to rebuild it. Most people are starting off somewhere in the low 600s, maybe 500s, with absolutely zero credit history. A lot of what they'll base your initial score off of is, are you employed? So do you have a job? Do you have income? Do you have bank accounts that have money in them? And then other things such as like student debt, student loans, past rental history, even if you've had a cosigner, like a parent or an aunt or uncle or grandparent cosign for a place where you've lived and paid rent. I'm going to share a few different routes that you can take if you're just starting out to build credit. I have about 6 of them outlined, but I really want to caution, do not do all 6 right at once. That's definitely going to be a red flag and probably put you a bit in over your head as far as credit goes. And this is what I'm talking about when I'm going back to my analogy of how you take care of plants and how you take care of your credit being very similar. You don't want to overwhelm yourself with more than you can handle as far as building credit. Number 1, which I've already kind of talked about, is get a credit card. While many people, especially young people, find it to be irresponsible, is actually one of the most responsible things you can do is opening a credit card or a line of credit. And just, it's all about your behavior with that credit card and really being responsible and only using it when you know you can pay it off. Number 2 is becoming an authorized user on someone else's credit card. You're going to want to go about this strategically and make sure that you're only being added to someone's credit card if they are responsible with it. If you are talking to someone about becoming an authorized user on their credit card, definitely ask them about their credit. Don't be afraid to do that. Number 3 is get a loan with a cosigner. So get someone to cosign on a little bit of debt that you take out. And this can look like a car loan. This can look like a loan for a big purchase on something at home, or maybe it's a line of credit for a piece of new furniture, some kind of calculated debt that isn't going to overextend you as far as like what kind of income you have and what you can cover in your monthly expenses. Having someone with a good credit history who will co-sign on a loan or on a rental shows creditors that you're trusted by someone who they trust. Number 4, there are also tools and services out there you can use that allow you to get things like your rent and utilities put on your credit report. Those aren't automatically put on there because a credit bureau is really going to look at things like debts that are actually on your history. So that would be, different credit cards and loans. But putting things like your rent and utility payments also show that you're responsible with your money and that you're able to make payments on the expenses you need to live. Number 5 is a new one to me, but it's apply for a secured credit card. So before working with Think Save Retire, I had never heard of a secured credit card, but really it's an awesome way for you to build credit in a way that you might be more used to, being someone who already has had like a debit card or a checking account. So with a secured credit card, you are paying towards the credit in cash. So you're paying a certain amount of cash up front so that there's less risk put on the creditor, so that they're taking on a little less liability in giving you credit to put towards your expenses. And number 6 is find a bank that will provide you with a credit builder account. A credit builder account is really what banks offer to people who are just starting out with their credit and are looking to build it up. Definitely check with the banks you already work with, but also look around at community banks, credit unions, and see what they have to offer. There are a lot of them out there that are willing to work with first-time credit users and really work with you and have better programs to make sure that you're educating yourself for future credit utilization. Those are the 6 steps that we've outlined on the blog. Go check them out on thinksaveretire.com to learn more about each one and how you can take advantage of each one at a time or 2 at a time maybe. Make sure that you're making every single line of credit or loan under your name so you're getting the credit for that activity. And this applies to everyone, but make sure you're carrying a balance no more than 30% of your total credit limit. Anything above 30% is going to flag you and might damage your credit score a little bit each month. And not stress enough, keep an eye on your credit report and credit score. You can get this for free every 12 months from major credit bureaus, but you also might want to look into different services that you can monitor each month. I know lots of services like Credit Karma get flack because they'll try and sell you on financial products. It's pretty easy to ignore those offers and just keep your head down and to the ground and to the grind on building your credit and using those different services just as a tool for keeping an eye on your finances and on your credit score each month. If you want to learn more about credit and how it really affects your long-term financial journey, as well as some stories about how people have rebuilt their credit and what they've been able to achieve, head to Think Save Retire. We definitely have some great resources for how you can build credit starting from scratch, or even if you're starting further down the line. So check them out. I'm Melissa with Think Save Retire. Stay tuned for next time.